All right, guys, today on the Kyler and Cleveland show, we're going to be talking about spreads, variable spreads, fixed spreads, slippage, requotes, all the things that the broker uses, in terms of their business model and how they make money and how you can potentially lower your costs as a trader. All right, roll the intro. All right, traders, what's up, guys? Welcome back to the Kyler and Cleveland show. Cleveland.
I'm Kyler.
And we're excited to talk to you guys today about spreads. We were sitting here near our trading stations. We don't ever really show this side of the office enough.
Nah, you did back.
Yeah, we're always in the back. But this is the full thing. We'll do a tour one day. But we were talking about some spreads because we've been noticing that we've been going through this whole regime of helping people rationalize what brokers they need to potentially be working with. And we've been seeing all these different numbers in regards to how wide certain spreads are, brokers with fixed spreads, and we just wanted to get into a conversation with you guys because we've been noticing a lot of questions in that arena, right? So we'll start with just the basics. You guys probably know that there are broker organizations that have fixed spreads and there are some that have these variable spreads. What's the difference between those two?
So the fixed spreads, the brokers are getting the quotes from the interbank network, and they're going to get the best quote and give you, on average, that 2 pip spread or that 3 pip spread. So Oanda could maybe have a 2 pip spread between the bid and ask, or they could have maybe a 3 pip spread, but it's going to be that fixed amount. When you have that variable spread, it's going to change that's all going to be based on market conditions. That's going to be based on news, liquidity. So that could start off between maybe 1 pip to 2, and then it could jump all the way up to 6 on some currency pairs. If you're talking about an exotic currency pair such as the USD versus Turkish lira, that could jump all the way up into the teens at some point. So it can get to be pretty hefty.
So let's say you had like a 100 pip target. You would literally, and you were on the USD Turkish lira and it had a 20 pip spread, you'd be in the whole 20 pips. And then your 100 pip target, you technically only score 80 if you hit that target. And
that's and if you were to start off with, let's just say, a standard lot on that, you're going to start off with negative about $200.
Oh, wow. Okay.
So it can be, like I said, pretty hefty.
So when do commissions pop up? Because we do see a lot of brokers that talk about commissions. Do brokers with commissions, are those commissions usually on the fixed spread brokers or the variable spread brokers where you see commissions?
The commissions are going to show up mainly on the fixed spreads.
Okay.
You can see Oanda they have variable spreads and fixed spreads. And they also have a commission pair and a non-commission pair. So it's going to be, on some of the brokers, it can vary. So
So okay, say the guys are day trading, right? What should they do in regards to this whole spread regime? Because I don't know if you guys know, but you got to think about it. Every time you're playing in this game, you're charged to take the trade. So if you're not doing better than 50%, then you're automatically going to lose money, right? So you obviously have to have an edge. All right, that's going to give you the ability to pull away from the drawdown that the spread alone is going to give you, right? But if you're day trading, of course, you're going to be paying more than a guy who's swing trading, right? The guy who's swing trading maybe opens up 3 or 4 positions a week. A day trader can be in 15, 20, 30 positions, and they could be eaten alive literally by the spread. So what advice would you give to somebody who's potentially day trading?
If you're day trading, I would say to stick with a fixed spread, so you can try to at least plan for the cost of your day trading and plan for the cost in your portfolio.
Right.
Because if you're going to be using variable spreads on a day trading, it could get to be an astronomical amount of cost that you would be spending.
Well, the other thing is a lot of guys are trading with smaller than $5,000 accounts, so they don't really care, right? So they'll see a pip spread, they'll see a 4 pip spread, and it's minute because it's like, all right, well, if I'm trading with micros or mini lots, then at the end of the day, $4 here or there is no big deal. But guys, once you start playing with standards or higher minis, you are taking into account spreads for sure. Because at that point, a 4 pip spread, you're literally $40 in the hole, right? A 10 pip spread, if you want to play something like the New Zealand cat or the whatever it is, those can get expensive. And sometimes we see a lot of opportunity on these quote unquote minor or exotic pairs. So you have to take into account, once you're scaling, if you guys aren't worried about it, you're going to worry about it. So you need to build it into your business right now, how you're going to maneuver around the idea of spreads and how you're going to you need to fixate on the number. If you see that the spreads are too wide, that is your broker, again, trying to pull you back from potential opportunity, right? Because if there's a lot of volatility, your spread's going to increase when it comes to the variable spreads. So during news events, during Trump tweeting, right, we've seen a Trump tweet spark the euro to hit like 15 pip spreads. and it's absolutely insane. But again, you guys just want to take into massive consideration, how you maneuver around spreads in general, what broker you're working with. Obviously, there's other variables as well, like requotes and slippage. Tell them a little bit more about slippage, I guess.
So slippage is going to occur when you get quoted or filled at a different price than you originally intended. So we could use a buy limit example. When you wanted to buy the market at $1.12, the market may be at $1.12.15, and you want to get in at $1.12, but you may get in a little earlier.
Gotcha.
And that's all going to be based on liquidity in the market and with your broker.
Right, so liquidity. So basically, exotic pairs are less liquid, so there's more capabilities of slippage.
Yeah.
Right, so price can jump. Like you see many gaps in scenarios like that on these more exotic pairs. That can entice slippage. That can make it so that your stops are, subsequently moved against. It can make it so that your limit orders are basically jumped, which is going to increase your average price. And overall, the more you play with pairs that aren't the majors, that aren't the minors, and in that area of exotics, the more likely you're going to get slippage, the more likely you're going to get these higher spreads, and just a lot more variables that the broker can't really control so well because there's less volatility, there's less participation. So then they kind of just leave you out to dry a little bit. So you just got to be extremely careful in that regard.
Yeah. I think too, it'd be kind of important to touch on, when the Swiss franc collapsed against the euro and the USD, there was a lot of, that would be probably the prime case where you would see slippage happen.
Yeah, we'll put the link below for that example, but literally the Swiss franc moved 1,500 pips in maybe about 2 or 3 minutes, and it blew thousands of traders' accounts. And FXCM was the biggest broker that fell. They owed over $300 million to their traders, and they couldn't pay up, right? So that's an example of how crazy, markets can be. And the spread at that point was really, it didn't even really matter because the market just moved so fast. But guys, that spreads in general. I mean, if we have any more details or anything else that we want to speak with you guys about, we'll post it below, and we may even make a nice little quiz for you guys to help you understand spreads inside of our mini chat. So maybe hop in the mini chat, we'll create a quiz to help you understand spreads. You score well, we'll give you a Top Trader t-shirt or something like that. Sounds good. Cool. Yeah, guys, look, Kyler Cleveland Show. We have some more content we're going to push out later on this week. If you guys got any questions, let us know. See you around.